Welcome back. Well, let's get chatting with Mohit Khanna, fund manager at Purnartha Investment Advisors, who joins us on the show. Hi, Mohit. Good afternoon, and good to have you on the show, Mohit. Well, I wanted to understand what's your strategy, and one factor that I'm looking at is the Contra call that you're taking. Everyone's bullish on financials, but you believe that, in fact, that's not a space that you're looking to load up on. And on the flip side, the chemical space, there's a debate whether or not it's bottomed out. You believe so. I think you're bullish out there. So run us through this Contra call first.
Right. Good afternoon, Nigel, and good afternoon to your viewers. Yes, for financials, we are a little bit of on an underweight position. We really don't understand or like that the deposit mobilization issues that the industry has been facing has bottomed out. We think there are more legs on that. On the other hand, if we see the provisioning that has increased in the first quarter year-over-year basis, we think that provisioning is going to being set at a new normal, which is going to be at higher levels. So yes, that will be creating a little bit of NIM pressure for these guys. So, and on the other hand, on the unsecured side, RBI has been very active and pointing out issues with multiple lenders. Fintechs have taken their fair share in the lower strata of the financing. So overall, we see that the road for financials is still looking difficult over the next few quarters. On the chemical side, you have to be very selective. So yes, we are seeing some traction on the margins in couple of companies because margins bottomed out around December. So we do like the base impact that we will see, right? The positive base impact that we will see in the chemical companies. However, in FY 25-26, there are a lot of capacities are coming on stream. So we need to be really watchful on the utilization of those capacities and the pricing. So we are purely bottoms up on that front because the sub segments within chemicals can get really tricky and they have their own market and demand shift.
Okay, Goldman Sachs, by the way, has lowered the GDP growth forecast for India for CY24. That's the current calendar year that we're in, not fiscal year, calendar year. They've lowered the GDP forecast by 20 basis points to 6.7%. So that's below consensus expectations, which is closer to 7%. And even for next year, CY25, GDP estimates have been brought down by 20 basis points to 6.4%. Again, below what the consensus expectation is. But will this spur the Reserve Bank of India to go ahead and cut policy rates? Anyway, dissenting voices have been have gone up as the policy minutes showed. Mohit, afternoon. This is Reema here. Thanks so much for joining in. So if you could take us through what would be the way you would construct your portfolio, what would be the top bets that you have right now?
Right. Thank you, Reema. Good afternoon. So I won't go stock specific, but on the sector side, we are overweight capital goods. We continue to like pharma. We are building our positions or increasing our weights on the FMCG side. And we are absolutely in love with the two-wheelers. We are overweight over there as well. On the
So
underweight, as
yeah.
Nigel discussed, we are underweight little bit on financials. We are equal with IT.
So you're overweight capital goods, auto and pharma, and in FMCG, you're building your portfolio right now.
Yes. We continue to like FMCG.
Got it. Mohit, you also run a multi-asset fund, if I got that correct.
Right.
Could you tell us what weights are you, are you allocating to different asset classes, to equity, to debt, to commodities? What is the current mix? And have you changed it in the recent past, given the elevated valuations we have in the equity market?
Right. So I do run a Purnartha multi-asset strategy. We call it Purnartha 1. And in that, I have equity exposure somewhere around 72 to 73% as of now. We recently reduced our equity exposure from 85%. We can oscillate the equity exposure between 70 and 90%. So we are at the bottom end right now. We just got it and got reduced that. On the debt side, we have 12 to 13% allocation as of now. Again, on debt, we can go from 10 to 25%. So again, we are a little bit lower on the debt side as well. On the gold, we are at 5%. That is the commodity bet. but we are sitting a little bit on cash. That is around 10% for us. We hope to find better opportunities, on the equity side, maybe if we do get, or the deployment in debt should increase from here on. This is little
Mohit?
unique in the sense because in this Purnartha one strategy, we combine the exposure to both equity, direct equity, and mutual funds as well, both on the debt and the equity side.
Right. Mohit, just going by what you're saying on the way you have moved your debt into equity portfolios, equity is at the lower end of the range and debt is at the higher end of the range, and also you have raised some cash. So are you a little
Yes.
bit cautious at current reckoning on equity markets?
Yes. I do see markets trading, as we can see, trading at all-time highs and even on the valuation side as well. Secondly, as Reema just pointed out, Goldman Sachs. So on the second, Goldman Sachs reducing India's GDP. So yes, we are also of the same viewpoint that the macros or the excitement over improving macros is already captured in the market. We want to tone down our expectations a little bit over here. And lastly, even if you see the sentiment side, so that is also slightly turning to be, being fully captured in the current evaluation. So all three fronts, what we follow, we do get a signal that we should be lowering our equity exposure.
You're sitting on 10% cash.
Yes.
You're hopeful of better opportunities to invest in on the equity side. What's the big
Right.
picture? Do you anticipate a correction is coming in the market?
Well, if only if I could know it for real. But yes, we want to be a little bit, on a safer side. On the other hand, there are multiple bottoms up, opportunities that are popping up in different sectors. So we want to capture those without increasing much risk in the portfolio.
Got it. Tell us about this call that you have on railways. Railways is, as a theme, is likely to get a lot of focus, a lot of capex spend as well. But these
Right.
stocks actually have caught the fast train. The valuations seem out of whack. How are you
Yes.
approaching this theme? I think you've had some exposure out there.
Yes, so we do have exposure in railways. We continue to like this story. So if you see last few quarters or maybe a year or so, most of the railways stocks have really performed well on the order inflow news announcements. Now, if you just remove Vande Bharat from the whole picture, the majority of the other order book should get executed over the 1 or 2 years. Only Vande Bharat orders are likely to go for next 4 to 5 years. So from here on, the execution becomes much more important. The execution capability will decide the stock returns from here on. The another positive factor for the railways is that the budget has been announced now, and we have seen the increase in the capital expenditure. Now, this expenditure has to be done within the next 6 to 7 months when we will have another budget coming in. So yes, the incremental orders coming in might not move the needle on the sitting order book. Execution will, start to coming into the focus, but the expenditure by the government has been squeezed into 3 quarters. Should give us some respite on that side. So we continue to like railway stocks. We continue to like stocks which have execution capabilities in railways and have a long order book or a long dated order book which gives me revenue visibility.
Where do you stand on real estate, Mohit? We've seen this entire urbanization scheme. The real estate stocks and the growth rates have been very strong for the last 3 or 4 years. So this upcycle has persisted. Now, there are some question marks that have the stocks priced in all the good news, or does the real estate cycle still have some legs to go? What is your own view on real estate? And, would you bet on the pan-India players or would you look at regional players?
Right. So while we don't have any exposure to real estate as of now, Reema, but in my sense, real estate is all about location, location, location. So I will be inclined to look at players on the regional side. Having said that, on in the Purnartha one strategy, which is the multi-asset strategy, we do have exposure to REITs. and that is where we continue to like those kind of income earning assets, wherein the lowering of interest rates will help me over a period of time. The second important aspect on that front is the GCCs, which are coming into India in big way. And that is where the REITs, I think, would stand out as a real estate investment option for investors over the next couple of years.
Got it. All right, Mohit, good to have you on the show. Thanks a lot for joining in. So we have got your Contra calls, fairly positive on chemicals, underweight on financials, and the way you want to play the real estate theme as well as rather via REITs rather than play any of that. Thanks a lot for joining in. We look forward to chatting up with you in the coming weeks as well. Well, as we had that conversation, actually, the markets are flattened out. So
Thank you for watching CNBC TV 18. For all our top stories and news updates, follow us on our social media platforms.